Countries like people need partners to thrive, and trade is how they connect. Trade means selling what you're good at and buying what you need, creating jobs and offering more choices for everyone. For Canada, rich in resources and talent, trading globally is essential for growth. Trade deals set the rules, making it easier and fairer to buy and sell across borders. Lower tariffs mean cheaper imports and better access for Canadian products abroad. Canada's closest trading partner has long been the United States, with billions in goods crossing the border daily. This partnership, built on strong agreements, has fueled both economies. But when trade rules change, it can shake millions of jobs and businesses. That's why recent shifts in Canada-US trade have been so significant, forcing tough choices about the country's future. The story of these negotiations shows how vital it is to balance opportunity with protecting national interests. In 2025, Canada faced intense pressure from the US led by President Trump to accept new trade terms. The US wanted changes, especially in the auto sector, and was unhappy with Canada's new digital services tax on big tech companies. The proposed deal included tariffs that would hit Canadian industries hard. Prime Minister Mark Carney and his team had to decide, accept a deal that could hurt Canada long-term, or risk economic fallout by saying no. Business leaders feared more tariffs, but many experts warned the US offer would damage Canada's auto industry for years. The digital services tax added fuel to the fire, angering Washington and raising the stakes. The government weighed the risks: short-term pain versus long-term harm. Would signing bring stability or just lock Canada into a bad position? The choice was clear: protect Canadian jobs and industries or give in to US demands. The pressure was immense, but the future of Canada's economy was on the line. Carney's government had to decide what was truly best for Canadians. In July 2025, Prime Minister Carney's government made a bold move. They refused the US trade deal. Their message was clear: no deal is better than a bad deal. The main concern was protecting Canadian industries, especially auto manufacturing and tech. Union leaders warned the US terms would devastate Canadian auto workers. The government prioritized long-term stability over short-term relief. Despite US threats, Canada moved forward with its digital services tax, insisting global tech giants pay their fair share. The risk was real. New tariffs could follow, but caving in would set a dangerous precedent. By standing firm, Canada asserted its sovereignty and refused to be bullied into a bad agreement. The world took notice. Canada would only sign deals that truly benefit its people. This decision was a calculated risk, but it sent a powerful message about national priorities. The government chose to defend Canadian interests, even in the face of uncertainty. Canada's refusal shocked Washington and the world. Few expected such a firm stand. The US responded with threats of more tariffs, ending trade talks abruptly. For Canada, this was a wake-up call. It needed a new economic strategy. The government began to diversify, building trade ties with Europe, Asia, and beyond to reduce reliance on the US. Canada also looked north, investing in Arctic infrastructure as melting ice opened new shipping routes. The Arctic became a new frontier for trade and sovereignty, offering fresh opportunities. At the same time, Canada shifted its energy strategy, focusing on clean technology and new markets. The goal: build a more resilient, independent economy. By rejecting the US deal, Canada signaled it was ready to chart its own course. The country started forging a global identity, not just a North American one. This bold pivot aimed to secure Canada's future in a rapidly changing world. Canada's stand against the Trump administration marks a turning point. The short-term outlook is tough. US tariffs could hurt businesses and consumers. But many believe this was a necessary defense of Canadian sovereignty and economic interests. Diversifying trade and exploring new opportunities, like the Arctic, could make Canada stronger in the long run. The future of Canada-US relations is uncertain. Will they renegotiate or will tensions escalate? The world is watching how both leaders respond. This moment will shape North American trade for years to come. Canada is betting on its ability to adapt, innovate, and find new partners. The hope that this bold move leads to a more independent, resilient nation. Only time will tell if standing firm was a risk worth taking. But for now, Canada is charting its own path.